Most people don't really know what a credit score is, but it controls a lot in life. It decides if you can buy a car, get a house, or even land a good job. One small number can make your life easy or really hard. But where does this number come from? And how do you actually increase it without feeling confused? A credit score is just a number between 300 and 850. The higher your score, the better your chances of getting approved for loans and credit cards. It also means you'll pay less interest, which saves you money over time. Lenders use this number to decide how risky it is to lend you money. So if your score is low, they might say no or charge you more. Now you might ask, who actually creates your credit score? Well, there are 3 big credit bureaus in the USA: Experian, Equifax, and TransUnion. These companies collect information about your money behavior, things like your payment history, how much debt you have, and how long you've used credit. Then, they use this data to calculate your score. What makes up your credit score exactly? There are 5 main parts that matter. The biggest one is your payment history. That means paying your bills on time. Next is how much credit you're using compared to your limit. Then come your credit history length, credit mix, and new credit. Let's break these down one by one. First up, payment history makes up 35% of your credit score. If you always pay your bills on time, your score stays strong. But one missed payment can drop your score by a lot. So even one mistake can hurt more than you think. Now let's talk about credit usage. It's 30% of your score. This is also called your credit utilization ratio. It means how much of your total available credit you're using. If you keep it under 30%, that's a good sign. But if you max out your cards, lenders see you as risky. The third part is how long you've had credit. That's 15% of your score. This is called your credit age. The longer you've had credit accounts open, the better it looks. Lenders want to see that you have a long history of using credit responsibly. So even if you don't use an old card much, keeping it open can help. The next piece is your credit mix. It's 10% of your score. This means having different types of credit like credit cards, car loans, or student loans. Lenders like to see that you can manage different types of debt. If you only have one kind of credit, it's not bad, but variety helps. Just remember, don't take new loans just to improve your mix. Finally, we have new credit. That's the last 10%. This includes how often you apply for credit and how many new accounts you open. If you apply for too many cards or loans at once, it can lower your score. That's because lenders think you might be desperate for money. So only apply when you really need it. So now you know the 5 parts of a credit score. But how do you actually check your score for free? Good news, there are many safe ways to do it without paying anything. You can check it through apps like Credit Karma or directly from credit card companies. Most banks also offer free credit score tracking these days. You also get one free full credit report every year. This is different from your credit score. It shows all your accounts and history. To get it, just visit annualcreditreport.com, the official site. There, you can request reports from all 3 bureaus. It's a smart way to check for errors or fraud. Now you might be thinking, what if I already have a bad credit score? Don't worry, you're not stuck forever. Credit scores can be fixed with time and the right habits. Start by paying all bills on time from now on. Then work on lowering your credit card balances little by little. Another smart move is to avoid opening too many new accounts. Every time you apply, a hard inquiry is added to your report. Too many of these in a short time can hurt your score. Lenders think you might be taking on too much debt too fast. So apply only when it really makes sense. If your credit score is low, becoming an authorized user can help. This means someone with good credit adds you to their credit card. You don't even need to use the card. It's their history that helps you. It's like borrowing their good reputation to build your own. But only do this with someone you really trust. You can also ask for a credit limit increase, but use it wisely. If your limit goes up and you don't spend more, your utilization goes down. That's a good thing and can raise your score over time. Just don't treat it like free money and spend extra. Self-control is key when building credit. Another helpful tip is to set up automatic payments. This way, you never forget to pay your credit card or loan bills. Even one late payment can hurt your score for months. Autopay makes your life easier and your credit stronger. Just make sure your bank account has enough money before the due date. You should also check your credit reports for mistakes. Sometimes wrong information shows up that isn't even yours. It could be a late payment you never made or a loan you never took. These errors can lower your score unfairly. If you spot a mistake, report it right away to the credit bureau. Fixing mistakes on your report is your right. The law gives you the power to challenge false information. The credit bureau must look into your complaint within 30 days. If the info is wrong, they have to remove it. So don't be afraid to speak up. It's your credit, your future. Now let's talk about credit utilization. That's a big one. This means how much of your credit you're actually using. If you have a $1,000 limit and you use $900, that's bad. Try to keep it below 30% of your total credit limit. Using less shows lenders that you're responsible. A great way to keep your utilization low is to pay early. You don't have to wait till the due date. If you pay part of the balance before your statement closes, it helps. This lowers the amount reported to the credit bureaus, and that keeps your score higher and safer. Here's a question for you. Have you ever checked your credit score? Most people don't check it until something goes wrong, but checking it early helps you stay in control. There are free tools online that show your score without hurting it. Knowing your score is the first step to improving it. There are 3 big companies that track your credit. They are called Equifax, Experian, and TransUnion. These companies collect your data and give you a score. Each one might show a slightly different number, but they all look at the same basic credit habits. So what are the habits that help your score go up? First, always pay your bills on time. Even one missed payment can drop your score a lot. Second, keep your credit usage low. And third, don't open too many new accounts too quickly. Opening too many accounts in a short time can hurt your score. It looks risky to lenders, even if you have good intentions. They think you might be desperate for money, so space out your credit applications. It's safer for your score and your peace of mind. Another factor in your score is your credit history length. This means how long you've had credit in your name. The older your accounts, the better it looks. So don't close your oldest credit card, even if you don't use it much. Keeping it open helps your average credit age stay strong. Credit mix also matters, but just a little. This means having both credit cards and loans on your report. Lenders like to see you can handle different types of credit, but don't take a loan just to boost your mix. Only borrow when you really need to. Let's say you're just getting started and have no credit yet. You can try a secured credit card as your first step. It works like a regular card, but you give a small deposit first. That deposit becomes your limit and helps you build credit safely. After a few months of good use, your score will start to grow. It's important to remember, building credit takes time. No quick fixes or magic tricks will raise your score overnight. Stay patient and keep following good habits every month. Over time, your credit will improve and open many doors. Better credit means better loans, lower interest, and more financial freedom. Thanks for watching. If you learned something new today, hit the like button. Don't forget to comment your questions or share your credit story below. Subscribe to The Finance Hustle for simple tips on money, credit, and side hustles. Next week, we'll cover how to use credit cards smartly without debt. Stay tuned and keep hustling your way to financial freedom. To sum up, your credit score is a number that shows how trustworthy you are with money. It's made from your payment history, credit usage, age, mix, and new credit. You can check it for free and improve it by paying bills on time and keeping balances low. Avoid too many new accounts, fix errors, and be patient. Good credit helps you save money and reach your dreams faster.